What's going on, guys? Welcome back to the channel. In this video here, we're going to be doing a stock analysis on Twitter. Now, this company's been making headlines left, right, and center because Elon Musk has bought, I think, 9% of total shares in the company, like a huge, massive stake in the business. He's got an invitation to be part of the board of directors, and he's going in to potentially reshape this massive social media platform. It's honestly hilarious, and this stock price has been going through the roof or just jumping up and down in the last several days. People are shaking in their boots. It's just an absolute mess. Let's look at the fundamentals, the financials, and determine a price to pay for this business. We're going to load it up in our stock research tool. So welcome if you're new here. My name is Leo, and we're all about investing and analyzing companies. So here we go. Here's Twitter loaded up in the stock research tool here, and we're going to go through our three different categories. Now, the first category we're going to look at is the company metrics, but Jesus, look at this chart. My God, 10 years of it's just a wave. And look at this price. Look, if we just go in the last, yeah, don't show that again. All right, 3 months. Yeah, that line right there. We went 39. Wow, up to $50. Okay. 52-week range, 31 to 73.34. Sitting at $46 currently at the time of recording this video. Let's jump into the company metrics. And what we like to do here, folks, is take a look at the 5-year numbers and compare them to the trailing 12-month numbers. Why did I say it like that? We're comparing the 5-year numbers to the trailing 12-month numbers and trying to gauge where this company has been and where is its projected. Can I speak today? So we have the company metrics loaded up. What we're going to do here, folks, is look at the 5-year numbers and compare them to the trailing 12-month numbers to try to gauge where this company has been and where it's going to go. Now, with Twitter, why did I say it like that? With Twitter, we're seeing our 5-year average PE ratio is at 18.83. However, we're in the negatives for our trailing 12 months. We're in the negatives a lot, actually. If we just scroll down these first 4 categories, EPS, ROE, profit margin has just been all down, but our 5-year averages have been positive. Very, very, very interesting. Our revenue is at $5 billion, but we're in the negatives in net income and negative in free cash flow. But our 5-year average free cash flow is positive. This company is just getting hit hard, left, right, and center. I'm questioning Elon's move. I really am. I don't know if he's going into this company from a value perspective, or just I want to just shake up this social media platform because it's advantageous to him. With an ROIC of negative 3.88 compared to our 5-year average of 1.05. Oh my God, that is absolutely horrendous. Almond Z-score is good at 4.03, but it's a tech company, and if you know me and my other videos, I kind of ignore this because this pretty much pertains to a lot of tangible assets and companies that have something tangible to give. And essentially, we want this number to be over 3, which is good because that means they're safe from bankruptcy, but take it as a grain of salt because it's a tech company and they don't really have any overhead costs because they have an app on your phone and that costs nothing to transport. Piotrowski score is sitting at 5. Now, we want this number to be between 7 and 9, 9 being the highest number we can possibly achieve. 5 is pretty mediocre. So, based off these categories right here, folks, I don't know if I move my hands like that, that would look better. Based off these categories right here, folks, Twitter is looking pretty mediocre. I gotta say, they were strong in the first half in the 5-year average, and then just going downhill. So I don't know what Elon's saying. However, from a value perspective, they're low numbers. Like there's nothing really attractive about this business so far, other than the 5-year PE average being at 18. The EPS is terrible. Return on equity is also terrible, and the margins are really low. Low free cash flow. I don't know why. Like you compare this to a company like Facebook, which obviously Facebook is Facebook, but a lot of people have Twitter. Like I used to use this app all the time, then it's just became absolutely toxic. So maybe people are kind of fleeing away from that. I have no idea. Let's jump into our next category, folks, and that's the financial evaluations category. And I'll stop waving my hands around like an absolute maniac. In this list here, we're grading this company a 3 out of 10. So where Twitter has good things going on is in three categories: is the 5-year PE ratio being at 18.83. However, keep in mind, folks, we are in the negative this year, so that's going to probably change. Current ratio is sitting at a 5.89, which is great because we want this number to be over 1.5. That means they have enough assets on hand to cover their liabilities. Now, we're also a positive in our revenue growth, growing at 15% or 15% over the last 5 years. It's small. It's pretty low. 37 billion. I mean, it's a $37 billion company, but you would think a company like Twitter, which is infamous for what they've brought to the table in terms of, being the social media platform that it is. It's just, it's quite surprising, I gotta say. But nonetheless, let's go through all the other metrics. Return on equity is terrible. We want this number to be over 15%, and we don't have that. EPS growth, we're actually decreasing, so that's horrendous. Any number over 1% would be great, and we don't have that. Debt to equity, 72.86. That's rough. We want this number to be we want this number to be under 50%, folks, and that would indicate to us that the company is growing the business through, equity and not through debt. They're taking on debt to grow this business, and we don't want that. Share dilution, slight dilution over the last 5 years at 1.62%. That means you own less of the business if you invested them up to 5 years ago. Within the last 5 years, they're slightly diluting you, so that's not healthy. We want them to be buying back shares or keeping the shares the same. So not too great, folks. And 5-year net income growth is at, negative because we're losing money there. We're losing free cash flow. And our return on invested capital is horrendous, as I said before, at 1.05%, which we want to be at 10%, folks. 10% or higher, just to indicate that we get a good return on the money that we have invested. So what this screams out to me from Twitter is that it's been a bumpy ride for this business. Now, I'm not too familiar in the way this company brings revenue in, if it's through advertisements and some other endorsements or this or that. But I mean, there's a lot of users, a lot of people I still have a Twitter account. I don't use it. Without getting controversial, it's becoming a huge, political space for discussion. At least, so I feel like a lot of people, from depending on which political side you're on, whether you're on the left or the right, it's becoming this battleground, essentially. That's what at least I see it as. You have this battleground between the left and right, just kind of going at it. If a company takes a political stance, I don't think that's the best course of action for shareholders. Personally, I think a company should stay neutral. Now, if a company is getting involved and, let's say, choosing which side to lean to, you're kind of cutting your user base and shareholders in half, because let's say people gravitate towards one side that, let's say, you're silencing or favoring the other side that you're promoting. Now, listen, that's not good for anybody. And if I was a shareholder in this business, I would just want them to stay completely neutral as possible. So that's my mindset. Listen, bring me the most amount of money as possible and do not screw anybody over, essentially. So what are my thoughts on Twitter so far, just based off the company metrics here and the financial evaluations? So I'm wondering if this move by Elon is just a power move at some point. I'm not too sure, but just looking at this free cash flow, negative in 2012, but then they were positive and they were growing, and now they're in the negatives again for 2021. Income statement, revenue. So revenue's been slowly growing, great, but net income, negative. We've only had 2 years, folks, of positive net income. 2 years, 2019 and 2018. In the last 10 years, that is insane. You know what the problem is with Twitter? I'll tell you right now. They got rid of Vine. That was it. That was the problem here. If they kept Vine, I'm telling you, none of this negative free cash flow and net income stuff would have never happened. Anyways, let's jump into a price analysis. But before we do that, folks, if you're enjoying the video so far, hit that like button and hit that subscribe button. It makes me feel warm and fuzzy inside, and it helps out the channel a lot. I enjoy making these videos for you guys, and if you want me to now analyze the stock, write it down in the description box below. I look at the comments, I answer your questions, I answer your comments. I love talking to you guys. But let's see what this company is worth and what's a fair price to pay, because I have no idea. let's look at some assumptions. So jumping down into the price analysis, we're doing a 10-year evaluation. I'm going to do conservative, moderate, and aggressive. And look at this, folks. We're dealing with some negative numbers, but we'll make something work. I'm going to fill these boxes out, and I'll get back to you in just a quick moment. So stand by. All right, folks. Fill this right out. And as always, I try to stay as conservative and reasonable as possible. Now, with Twitter, because we've had some negative numbers just come up in the last year, I'm trying to stick between the numbers that are positive and some numbers that would make sense. So our 5-year for revenue growth, we're at 15.7%, 77%. So we're going to do 10, 12, and 13. And profit margin, we're also going to keep it conservative, because if we're able to hit 8.53, I have to go with 4.56, although this negative 16 and negative 4% number is terrible. I'm going to assume that they have to at least hit something like this. So there is some speculating involved, folks, with these assumptions, and that's something I don't like to do. But this is a company that warrants it, just because they're kind of all over the map. I don't know what to expect with this business. And free cash flow margin 4, 7.5, and 10, because I believe if they are able to hit 11.48, they could probably hit 10 on the high side, and 7 is somewhat manageable. But 4 is the number we're really looking at here. That's the go-to. Remember, this is like my conservative assumptions right here, this box here. This is what needs to happen, and this aggressive box here is the unicorn, and moderate is kind of, well, if it happens, awesome. That's more, somewhat like something that's awesome. Price to free cash flow and PE ratio. Now, this is something I'm going to have to speculate on, but PE ratio, I'm going to keep it at 12, 14, and 16, because as the company gets larger, it's hard to grow, and it should warrant a lower PE ratio. Now, it being at 18.83 in the last the last 5 years as our average, it only makes sense to stick within the 12, 14, 16 range. Price to free cash flow, maybe I'm too conservative on this, being at 10, 12, and 14, but it is in the negatives, folks, so this is going to assume some positives. Let's put a desired return in and see what this company comes out to be, and it is an absolute disaster. Look at that. We're at $13.44 as our average calculation, $5.92 on the low end, 13 on the moderate side, and 20.93 on the high side. Our current price is at $46.23. When was the last time Twitter was at $13? Let's see. Well, we gotta go. It's been a while. I mean, we're in that range probably in 2016. This is, yeah, not good. Not good. So here's the thing, folks. This is just, it's overpriced. It is so much. It's such a bumpy road of what this company's been on in terms of revenue, net income, and free cash flow. Like, it's the numbers, and the numbers are here, folks. It speaks for itself. They're diluting you. The free cash flow is going down. The net income's going down, and it's slowly growing. This is a business that I would just stay away from, because the fundamentals and the price are just not there. So with this move that Elon Musk is doing with the company, it could shake up the business for better or for worse. I'm not entirely sure what's going on. For me, I have a Twitter account, but there's nothing compelling me to go on and use the app. This is a business, and not to make it political. So here's the thing with Twitter, and this is why I believe it's probably lost its way. And I think at one point, and why Elon Musk is probably jumping on board with this, is that I believe they've lost the fundamental viewpoint of what the app was supposed to be as this free speech platform. But now and and perhaps I could be completely wrong, but I believe he's jumping in there because he doesn't believe it's truly that, where it is this corporate entity where you are restricted of what you can and can't say, and it's where instead of being the town square of where you can go and yell out to the world, and if anyone answers you, they can yell back. It's pretty much okay. You're in the box, and you can say whatever we allow you to say in the box. Now, that's just my interpretation of the business and why shareholders are not, or why the evaluation is what it is. So I think somewhere along the way they definitely lost what the app initially stood for, and that's why it's getting such poor evaluation, poor revenue growth, poor free cash flow growth, and frankly, shareholders are probably tired of this business. So would I jump in and invest in something like this? Well, one, absolutely not, and the price doesn't make sense. But two, the fundamentals to me don't either. So that being said, folks, those are my thoughts on Twitter. What are your thoughts on the company? Write them down below. Let me know what you think. This is a very tricky business to talk about because it's very prevalent, but also run very bad. So I don't know. So let me know. That's the video. I'll see you in the next one. Thank you so much for watching.